Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Thursday, February 27, 2025. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? We got a lot of stuff on the docket. We had a thrashing this afternoon in the market, and you see a blue line running across the screen because we've been talking about 581.40 as a target on the downside. It's a really important place. We're going to expect a bull-bear battle around that place, whether they flush them on Friday or flush them on Monday. Whatever the case may be, that's what's next on the radar screen. Write it down, put it on a sticky note. But wait, there's more. Let's do the big picture assessment of where we are. Let's go over to the weekly chart. And yes, it's still Thursday. The week's not over yet, but she is below the 20-week moving average. And once below, and certainly by a considerable amount, what do we turn our focus to? We turn our focus to an important number that we've identified already, 581.40. But we're also going to turn our attention to the next big time breakup candle low in the sequence. This one happens to come in at 575.35, and from a weekly chart perspective, you could expect a bull-bear battle around that place if they spike 581.40. Anywhere in the vicinity of the big-time weekly chart breakup candle low, you're going to expect the goal line defense to be sent out on the field. So all in all, there's really no material change on the chart from what we discussed all week long. The material change is the fact that they're actually doing the thing that we've been waiting for. I want to show you something cool. We're going to work backwards from a note that was posted at 11:10 from Inside the Numbers. The big picture says, daily chart, they're making a bearish, flaggish kind of pattern. Awareness. That means that they're going to, if that plays out, head lower, right? Right. Well, check it out. When I wrote that, I was really looking at the 4-hour chart also and a 2-hour chart. I'm looking at this saying, hey, this is a bearish pattern riding over the 200 period moving average. If this thing breaks down, it's going to break down, period, full stop. When you go to a 2-hour chart, you could see here, same routine. They just can't get up and go. This is firmly in a downtrend below all the moving averages. That was kind of my telltale sign of what was going on today. So I thought it was worthwhile to point that out. Not only for the members of Inside the Numbers late morning today, but just now for everybody's benefit. Anybody make money today inside the numbers in the live room? You bet your bottom dollar. We're going to get back to that in a moment. Anybody make money today in the swing trader, the lazy swing trader automagical algo system? Check this one out. How about Qualcomm melting down? This was a short trade entry up here. Guess what? It's been a risk-free, emotionless trade. We've already taken one profit target. Today, a second profit target was achieved down here below 158, and she's still going. How did the lazy swing trader automagical algo know to be short tech? How you doing? Qualcomm down $7.66 or 4.73% today. Lazy swing trader automagical algo system. Look, here's a list of the closed swing trades. As you can see on the right, there's a few red ones in here. There's 3 out of, I believe, 25 on this page. That's a pretty darn good win rate. You see what's going on here, 6% in Qualcomm, almost 9% in Hershey. And these are averages from multiple exits. I defy you. Here's 18%, 7 or 8%, another 5, 5.5, another almost 6. You go look at other stuff. I defy you to find a more consistent service. Tell me what it is. What I always tell my members is base hits put you in the Hall of Fame. A lot of traders will play these with options. So a 7% gain in the price of a stock is 20, 30, 40, 50, 60, 80% gain in an option, depending on how fast it happens. These all happen within days or weeks. That's what swing trading is. Lazy swing trader automagical algo system. Now, we're back to the SPY, and we're on a 5-minute chart. Right of the vertical is today's activity. I want to show you another thing that's pretty slick, as they say in the trading parlance. Here's a snapshot of inside the numbers, the commentary. And as you know, we work off what's called a pivot. Above a pivot, she's bullish. Below the pivot, she can fall. Today's pivot comes in at 598. A pivot initial hit, first time, best time, as my traders know, is overhead resistance from underneath, if you will. So this was the early commentary. This is on the board at 0:30. What's the scoop today as we get closer to 9 o'clock? By staying above 590, just stay with me on this. The door is open to run up to the pivot at 598. So the pivot's a target and overhead resistance. Okay, fair enough. Now let's keep this in mind. 595.90 is important. So if you just look at this at 9:32, here's what we got. 595.90 is support. 598 is pivot and resistance. One or the other thing is coming. What was high of day? How about 598.02? Right up here. We're traders shorting the pivot. In the live room, inside the numbers, the short answer, no pun intended, was abso-fucking-lutely. Then we got a pretty nice sleigh ride down, as they say in the trading parlance. We had a long trade as well. We had a double barrel situation. First a short, then a long. It's all in here. Pause the video, read the notes, go back to the chart to double check the work. Let's just focus in for a second on 591.10. Need I say more? 591.10, spiked it, ripped it back up in the other direction. Pause the video, read the notes, go back to the chart, and double check the work. It's all in here, everything you need to be successful trading the S&P, whether it's options, futures, options on futures, exchange-traded products. It doesn't matter, they're directional trades. Check this out. And by the way, this is at 11:10 in the morning. By the way, if they were to get below 589.20 and a hard sell this afternoon, the door would begin to open for 585.85. Smelled like a target to me down here at 585.85. That deserves a how you doing? Pause them, read them, go back to the chart to double check the work. Before we move on to the other markets, I have a simple question for you. Who's given you more than this? Who's given you more precise stuff than this? Who's helping you make money? Who knows their numbers? Now, what's going on over in Camp IWM? They continue to melt down. They're below all the moving averages, and we know the jingle. Below all the moving averages, the trend is your friend until what? Until she throws your shit out the window. Looks like your shit already got thrown out the window in the IWM. 208.95 is a target on the downside. May get there tomorrow. We'll see. Could be a Friday flush situation, Friday flush and recovery situation, depending on where they are and what numbers hit. More importantly, the weekly chart, we're going to see where they close the week. Are they going to close the week below this breakup candle low, below the 50-period moving average? That would be an ominous sign for the next big-time breakup candle low in the sequence or lower. You could get them all the way down here at the convergence of the 100 and 200 period moving average, not necessarily in one day, one shot, but that could open the door for a flush lower. Very, very important weekly close tomorrow. I would write that down and put it on a sticky note. We'll stay with the weeklies for a second with team transports, and guess what? Again, giving up that 50-period moving average. Bearish pattern, hovering, defended at the 50-period moving average, all of a sudden giving it up, giving ing in italics, because we have to wait for the Friday close to be definitive on where they close the week, above or below that place. Again, you have another big-time breakup candle low in the sequence. If they give that up and the 50-period moving average tomorrow, that's going to open the door for the 100-period moving average and or lower. Daily chart obviously firmly in a downtrend, below all the moving averages, leaking lower. She's leaking oil from the transport department. What about the Q people? We have what's called a woodshed day from the Q people. Down almost 3%, 2.78%, over $14, $500 even in the Qs on close. A little bit above 500, it's close enough. Don't split hairs over pennies. You go from all of a sudden teetering on the 100 period moving average to heading directly for the 200 period moving average. We'll see how it pans out. A flush down tomorrow would get you another 10 points down maybe to the 200 period moving average. Could have to wait till Monday. We'll see. Below the 200 period moving average, there is a number that I have on the board. Do you want it? It's a spike of 487. We'll call it 486.85. It is below the 200 period moving average, and that would be, as they say in the trading parlance, if reached sooner than later, like Friday, Monday, that is a snap type of place. I would write that one down, put it on a sticky note. What about the XLF, the financials? How about bucking the trend today, up 28 cents or 0.5%, still making a bearish pattern, couldn't recapture the 20 period moving average, but nonetheless was positive. So we'll take that at face value. We'll continue to watch and back above the 20 period moving average on close, and we'll say that this bearish pattern that's developing here on the daily chart begins to be moved off the table. This is a bearish box, if you will. If this plays out, you're looking at a leg down, but we do have to notice that the XLF was positive today. It was an outlier, was an anomaly, and you know what I say. If there's nothing wrong with the financials, if the financials aren't falling apart, it's likely the market as a whole, the structure of the market isn't really falling apart. It's just a corrective move. Let's go back to the spider. We'll go back to the monthly chart, and we'll just reiterate what we've been discussing all week on the monthly chart, saying, hey, there's really nothing wrong with this. They're still going sideways on the monthly chart, even if they came down to test this big time breakup candle low on the monthly chart. There's no structural change or damage to the monthly chart, meaning the long-term trend is still in the upward direction. This becomes just a bunch of hocus pocus noise for intraday and short-term traders. What about Smashmouth? Woodshed Day down 15 bucks, 6%. They just got taken out, smashed, shot behind the woodshed 3 times, maybe even 4. Better picture of what's going on from a weekly chart perspective. Giving up this 50 period moving average, and you know what this is? This is a bearish, wedgish type of situation. Doesn't matter what you want to call it. This is a channel. It's a bearish wedge. Move down. Then you have this flag, bearish wedge, bearish anything you want. And then all of a sudden, here she comes on a breakdown below, heading to test some bigger stuff. Going to test what? Going to test some lows here, important lows here. Going to test another important low down here. Where's this? Big time weekly chart breakup candle low. Get rid of this to clear up some of the noise. We don't need that. And you could see where we're headed. We're headed lower, headed into this zone around the 100 period moving average. Big time breakup candle low. That would represent a bounce back type of place around 200. Look what you have. You have a big time breakup candle low. Big fat round number around 200. 100 period moving average. How much more stuff do you need to say, hey, this place has some importance? You don't need too much stuff. I'll give you the answer. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, my strategic forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.